All right, looks like most people are in. We'll go and get started. Welcome everybody to the Sierra Pacific Cognition 360 joint webinar. Today we're going to be talking about agreement profitability, how to unlock that, how to see that in your current MSP, and then what do you do with that once you kind of figure that kind of stuff out, because that's kind of the big question, right? Today, I'm so excited to have these two on. They've got a lot to say, a lot of value around these topics. I've got Kathy Boulet with Sierra Pacific and Christy Perez with Cognition. I'm Aaron Kennedy. I'll just introduce myself real quick. So I had an MSP, helped run one a while back to sale, and then jumped on board with Cognition about a year and a half ago. Once I saw what they were doing, I was really excited about it, and all the things I wanted to see as I was trying to manage people and process and customers and all that kind of stuff. So that's kind of how I got involved. Kathy, if you want to go ahead and introduce yourself.
Thanks, Aaron. My name is Kathy Boulet, and I am the Director of Consulting Services for Sierra Pacific Group. I've been with Sierra Pacific for about a year, and prior to that, have worked in consulting of various types related to managed service providers and other IT companies. And I used to be a customer of Sierra Pacific, so not just a participant, but also I used to be a client.
That's awesome. And then we have Christy Perez, Partner Success Manager at Cognition360. Christy, tell a little about yourself.
Hi, everyone. Thanks for joining. We're super excited to have so many of you on today. I have been in the MSP space for about 20 years now, so it really shows my age there. Worked at 3 different MSPs over the last 20 years, was a partner at my last MSP, and got to know Aaron through our user group, actually. And so he kind of told me about Cognition. I was super impressed with the product, and so here I am today. Very excited to show you guys some reports and hopefully see if it's something that can help you guys out in the future as well.
Great. Thanks for sharing that. I just want to throw out today, for those who are attending at the very end here of the webinar, and again, we've only got about 30 minutes or so. We will do a drawing basically for someone to win a free ConnectWise assessment from Sierra Pacific. So that's a pretty hefty engagement that they're offering for free. And then Cognition360, we will be doing a free onboarding as well for that same customer. So you get kind of the full feel of all that for one lucky winner today. As we kind of move through the webinar today, if you got questions, you can throw those in the chat, in the Q&A and that kind of stuff. And we'll kind of answer those live, and then we'll couple some of those at the end as well. And then we'll just kind of have an open Q&A at the end for Christy and Kathy. But I did want to go ahead and get started. Let's talk about agreement profitability. So one of the things about agreement profitability is everybody wants it, but nobody really knows, how do I set up my ConnectWise to get that? And even when I do have that, what do I actually do at that point? So I'm going to throw us all back off the screen share so we're all talking to each other. But one of the things that I think a lot of people want to know is, how do you set up ConnectWise to the agreements to be able to show this kind of stuff? So at a very high level, what we want to show you today is how to set those up. What are the kind of key things that you want to do? Obviously, this is not a how to create an agreement ConnectWise tutorial, but it's how to set those up and what are the key things you need to put in there. And then once you've got that from a reporting standpoint, what can you do with that information? How do you get that information out? Where are the squeaky wheels, and how to identify that? Because obviously looking through every single agreement on a monthly basis isn't feasible either. So Kathy, have you talked with customers before about how to set up those agreements in ConnectWise?
Yeah, absolutely. We would, during all of our engagements, we work with clients to review their agreements, how they're set up, what type of information is useful to include in those so that you can get proper profitability reporting. Realistically, though, the agreement profitability report is the output at the end. There's a lot of things in ConnectWise that need to be set up ahead of time to be able to allow that reporting. One of those examples, of course, is hourly cost. A lot of times we'll have clients partners who come in and their hourly agreements are showing super profitable. When we dig into it, we look at tons of time put against the agreement, so it shouldn't look at that profitable. And when we dig into that further, we find that they don't have hourly costs or fully burdened costs in their member setup. So that's one area that we look at as well that's kind of outside of the direct agreement setup.
So speaking about those hourly costs, because that's always a big thing, Christy, you're involved in this process where in Cognition, we're looking at things like agreement cost and labor costs and how that works. How do customers handle that when they're kind of coming into, okay, I want to see this from a reporting standpoint. How do I figure this out, and where do I put that information, and where is it safe for me to put that information? Because a lot of people don't want to just expose, hey, I'm paying this employee this amount and this employee this amount. How do we do that?
There's a couple of different ways that you can do it. If you have your ConnectWise locked down pretty solid from an admin standpoint, that cost does go on to that member setup page for each individual member for that fully burdened rate kind of that Kathy was talking about. If you are worried about it, I have seen organizations that will, kind of take like their help desk or their field engineers project and kind of give an average rate as well. So they might say, help desk at, 25, field at 50 or whatever it might be, and put those rates in. So for the reporting, it's not going to be completely, accurate from a profitability standpoint if you don't have that to the penny, I guess, cost in there, but it'll at least give you, a pretty good idea. So depending on how sensitive you are, with that data or worried about that data getting out, that's where you would kind of make that call as to put in the fully burdened rates versus kind of that average rate.
Yeah.
There is actually a new feature coming, and the next version of ConnectWise, I think it's 2021.1, possibly. I don't know. We were a little late. We were a little. Is it 2? We were a little late with 2020.4. But there's a new feature coming that will actually allow you to have security specifically on the hourly cost and hourly rate fields member profile. So that requirement to consider who has access to that information and possibly average it out goes away.
I've not heard that. That's great.
Yeah, that is really good. A lot of times you have admin set up in service that you don't want to see that information.
Yeah, for sure.
So one of those things, and Christy, if you want to go ahead and pull up a little bit of the cognition side. So what I want to show at a high level is how to surface up this information and then turn that stuff kind of into gold. And you turn it into gold through making changes in the organization, that kind of stuff, which Kathy knows about and we'll talk about in a minute. And then you circle back to the tool to say, hey, okay, we made these changes, but how did that actually change over time? So you can see that trending of like, hey, and March of 2021, we made this change. And over the next 2 months, you can see from a data standpoint, what actually changed, who's on board with that change and who's not. And that's something you can see in this type of tool that you've got here.
Yeah, so in the report, this is the main report screen for customer profitability, the summary page. This is showing all of your agreement types. So this first one up here is like that main managed services agreement for those all-inclusive agreements. Over here is kind of that trending that Aaron was talking about, where we're going to show you kind of trending for your effective rate, contribution rates, if you're looking at that. Also your margin. With our reports, you can, if you click on one particular type of agreement, it's actually going to sort that data for you as well. So you can see that trending across. You can also drill down and look at it individually by customer to see, what customers are on here. This is looking at a 12-month period. You can change this, look at it just, 6 months at a time, however you want to do it. You can also just do sorts and say, just show me managed services. And then it's just going to take all of those other agreement types off for you. So you can just see your average margin across all your managed services agreements, 64% with an average effective rate of 203. Now, this, again, is just kind of that bigger overview. With our reporting, this is kind of when you start getting down into the details, and this is where, Kathy and Sierra Pacific will kind of work with you more when you're starting to look at your agreements, how profitable are we? Where are our problem clients? This is looking at it by individual customer. So you can see here, This is looking at 1 month to say, here's the value for last month. And then it gets down to also show you what those hard costs are. And then we also pull out what we call a target hour. So what this target hour is, it's a cognition. We've come up with a formula to say, based on a margin, which we have in here, a 50% margin, you cannot go over this target rate after hard costs come out to hit that margin of 50%. So you can see with this top one here, it does have their actual labor hours at 169. So they did go over that target hour, but it's also pulling in that labor cost for you. That labor cost is what we were talking about before, like Kathy, when she said she first started working with clients, one of the first things is, what does that member cost look like? So this is where I was saying, if you put in that average, it's not going to give you a perfect margin or effective or perfect margin rate profitability, but it will give you an idea to what that looks like. So if it is exact, it is an exact labor cost. So that labor cost and that hard cost is going to come out to then show you what your profit is for that particular month, for that particular client, to give you that margin and that effective rate. So if you do see one that looks a little low, you can actually drill into the labor to say, like, why did we have so many hours on that particular client? You can drill in, see the ticket labor, and it's going to show you over here your top tickets by labor. So you see here, there was one ticket that had over 10 hours on it with 4 different resources. You can actually then click onto that particular ticket. It's going to actually tell you what the type, subtype, and item was on that ticket. So it was a printer issue. And you can actually drill back into your ConnectWise Manage to look at it in more detail and then see the engineers that have worked on it. If it was a printer issue, one thing to note is how many other printer issues were there. So that's when you would get into like your common issue, what we call common issue reports, where we look at your type, subtype, and item. And you could actually drill it in to just one particular customer to see, are we getting a lot of printer issues and do we need to replace this printer? So it's a way to find it. Another thing with the reporting that we put in is you can click on a particular client here, and we're going to let you see your target hours over 8 weeks. So what we have found is waiting to the end of the month to find the problem, it can be an issue. So you want to go by weeks to see, okay, we're over, here's our target hour, we're over that, we're going even higher. So it's finding those issues, before it's too late in the organization.
Great. So I think one of the things that Cognition is doing here is it's making it easy to find where do I need to start looking. And I think from a process standpoint, which is something you guys are great at Sierra Pacific, is once you've got that information, what do you do with it? So you've got a low profitability customer. Do I go then and have a conversation with the customer? Do I have a conversation with the service manager? Where do I go as far as the next step? And then the other thing about that is you don't necessarily just want to look at like the last month. You might want to look at over the past 6 months or something like that, because one bad month could have been your fault. I mean, it could have been a technician who wasn't paying attention and deleted data and said that then they're suddenly not profitable. You don't want to go have a conversation with that client of, oh, we're going to have to raise your rate. And then, oh, it's because, but you don't know why that actually happened. So you want to look at trends over time. And that on a monthly basis. Kathy, how do you guys approach that? What do you coach people to do once they find these low agreements? What type of processes can you implement for that kind of thing?
Sure. So as Aaron mentioned, you're not looking at 1 month and saying that there's a problem and I need to renegotiate or something is going on with this client. So you want to look at this and step back from it and look at your profitability over a period of time. But sometimes your type of agreement might not be set up correctly that could cause issues in the way that you're reporting profitability. So you're also looking at, is this customer or is this type of agreement that is always having this problem? Maybe one example that we come across a lot is partners who have set up their other recurring revenue agreements to cover time. And I've come across this quite a bit. So your profitability on those agreements looks really terrible because the agreement is defaulting on your tickets. You're putting all your time against it. Meanwhile, it's really just, you're selling a $7 license for $10. There's no margin built in that for service, and you're missing all that billable labor. So a lot of times we can look at how the agreement is set up and you can find issues there. Your fully burdened rates need to be looked at occasionally and make sure you're keeping up with the changes in people's salaries and things like that. You're looking at this, is it a variance over this month? Was there a deployment? Did we have a project, as an example, where we rolled out a bunch of new equipment and then we had a bunch of reactive requests from end users who didn't know what they needed to do or how to find something that they needed? So you can also use this information that's not necessarily telling you, I need to renegotiate this customer's contract, but I might need to look at how I scope my projects to include more time for training or providing a document to the end users that the client can give to end users that says, here's where you're going to find what you're looking for when you come into the office tomorrow with this new equipment. So all kinds of things that you can use to better scope, to learn how to better scope your projects could come from that information as well. So it's not always just this customer is unprofitable. You got to look at bigger information to figure out what's going on. The other piece of it is, there's training issues. Are some technicians putting time against a certain work type when they shouldn't be? So it should be billable, but it's going against the agreement because they're just sticking with the default work type, as an example. Is there a training issue that a particular technician just happens to be getting more tickets for this customer, but they're not really good at that kind of ticket? So it shows up more on this customer, but it's not an issue with the customer, it's an issue with their skills, right? So it could be a training issue from that perspective.
These questions that Kathy's raising, Christy, is that where you can drill down into these reports and show that?
You can actually drill into any of it. So one of the things she was talking about, was there a project, for instance? So I was looking at this particular client, it's like their effective rate looks like it was staying pretty good. And then you see that it dropped. So you could drill into that ticket labor and then look to see, so here's a ticket for 14 hours. If you drill into that ticket, you can see that it was a problem with the phone. So maybe there was a phone system project, for instance, that might have caused those issues. So like she said, it might have been a training issue, or it was fallout from that project that caused that agreement to go down. So, it's really quick ways to see. You can actually drill even further into this ticket data and see even more labor analysis on it as to how many tickets happened for that particular project, for that particular ticket. So that is one way. And the other, when you're looking at those overview hours, as she was talking about, your labor costs being incorrect, or even your hard costs, kind of being incorrect on that agreement, or do you have multiple child agreements set up to where you do have that labor going to different agreements? You could actually sort by your child agreements to see this. Here's one that has 12 child agreements. You can actually go into a drill through to look at all parent and child agreements. And it's going to let you see how much labor. So with this particular one, you can see it was done right. All the labor went to that parent agreement. But what Kathy was talking about is sometimes those child agreements might get set up incorrectly to where they were a default. And then you have time going against those agreements that might be an $89 agreement, and it might have 3 or 4 hours on it to then make that agreement look like it's not profitable. So this is just a quick way to see that.
Yeah, and another example of that would be, the technician, it might default to your parent agreement, but the technician sees it's a question about Office 365 as an example. So they switch the agreement to the Office 365 agreement. That's a training issue. You always, don't change the agreement, whatever it defaults to, you're going to leave it there because all your labor is covered under the parent agreement. So that's an example of a training issue that's internal, that has nothing to do with the client doing something incorrectly. Yeah.
Yeah, and so sometimes it's just set up too.
Come in here real quick. We're getting some questions in the chat. Talking about agreements, do you guys recommend agreements on hourly clients? I guess that means time and material type clients.
You gonna take that, Christy, or am I?
I think Kathy and I are on the same page with this one. We've talked about it before. So best in class, we'll say, I guess, MSP best in class, the word on the street is all clients need to be on an agreement. And so there's, I've heard, time and material agreements should be set up for all clients. So there's always an agreement to pick. I've never wanted that. But I was also on the finance operations side. I like to know which of my clients didn't have an agreement or time and material or did that time need to go on to an agreement? So it's a good way for it to stick out. So I think that if they don't have a true agreement, and I think that's how Kathy looks at it, is if it's not an agreement, then don't set up an agreement. That time should stay off and just go out as a normal T&M invoice. But that's just my opinion on it from working in the system.
Yeah, and we work hard to set up ConnectWise to bill at the rates that you want it to bill at if somebody is not a customer. So you don't need an agreement to cover that. Some people have asked me, well, what if we agreed to a lower price? Why are you agreeing to the lower price? For a period of time, for a particular piece of work? Like, let's set that up in the system properly so that it only applies to the things you want it to. But generally speaking, consistency is what keeps your business running and operating and able to be managed in a way that is less stressful, and understand your profitability truly is less exceptions to the rules, right? And so that's why we also agree. We don't agree, prefer to have time and materials agreements for that reason.
Yep, glad you guys answered that one. I've heard quite a lot of debate about something like that. It's just kind of crazy to even say out loud. All right, what else do you guys want to show in terms of agreement profitability and how to dig in and really unlock that?
I was looking at some of the questions that came through, like from the sign up, Aaron, and one of the questions was, how do I see which clients do I need to focus on, or which agreements? Because, like, for instance, and this is just sample data, but there's 138 agreements here, so I don't have time to look at each one of those all the time. I really like this target threshold report. So with this report, what you can do is put in your target hour percentage, customers that have exceeded this target. So if it's anything over the target hour, 80% over, you can change this to 70, whatever you want. It's going to pull in just those agreements that have hit that target threshold for that particular time period. And then you can then just focus on those clients. So with our reporting, you can actually subscribe to this report. I've seen this, being subscribed to by account management, service managers, team leads, whoever is over watching, those numbers on agreements. And then you can actually drill into the agreements here and see where were those numbers. So here on this weekly basis, you can see, target hour is 43, and then all of a sudden they started going up, but then they did go back down. So it is just a way for you to kind of watch just the ones that need to be watched instead of having to look at everything. And then the other thing I would look at is the margin and effective rate reporting overall. So again, kind of like Kathy was saying, was there just one little issue that needed to be corrected and then it went back up? So it's looking at those trends, or is there one that went down and is continuing to stay down? So those are the ones that you really need to look at, watch. To then, do we need to increase their rate? Did they bring on another company that you didn't know about? What made this drop as low as it did? Another report that we have, I really like this one, especially for account management, is this top effective rate, bottom effective rate customer report. So this is going to let you see, and you can sort this. This is showing 2 months. You can look at it by 6 months if you wanted to see, different averages. This is going to let you see what the effective rates are of your clients. And then you can focus on the ones that need to be focused on. So from an account management standpoint, I think this is a great report to have them look at. And then you just kind of set a target in the company. It's like, hey, I want to get all of our clients to X effective rate. And I hear them all over the board, 150 to 250, whatever it is for the company, for your company that you've decided you want to get it up to, just shoot for that target. And then you watch them every single month. And then you meet with your clients to figure out, show them the trends to either, hey, we need to do some projects to get rid of these tickets, or we're going to have to increase your rates so if we're both getting value here.
Yep.
Does that help, Aaron?
Yep, it does. Another question we got, just being mindful of the time here, is agreement profitability. We pull that from the P&L and QuickBooks. Why should I be looking at this in ConnectWise Managed? This is probably a long answer. Kathy, you want to take that one?
Sure. So the P&L profitability is really looking at it at the macro level. It's looking at it at your categorization of certain revenue. So for example, if you had managed service revenue, you'd have a managed services cost of goods sold, take those two together, and you can look at that offerings profitability. But you can't look at it at the customer agreement level. So the reason for that is your hours don't come across. So there's no way in QuickBooks to get how much of your salary went towards that particular contract amount, right? So if you think about where that data is in ConnectWise. So the profitability at the agreement level comes from ConnectWise, and it's a combination of the amount of time that's put against the agreement and the fully burdened rate that's in your hourly cost field.
Okay. Yeah, great answer. Yeah, we hear that question a lot. I think it's important to look at both for different reasons. Yeah.
For sure. Yeah, if you think about it, QuickBooks has no concept, or your accounting package has no concept of how much of your technical team's labor went to one particular contract. So that comes out of ConnectWise.
Yeah.
Erin, I did see a question come in on target hours, which we get this question a lot. How are target hours being calculated? So we do have a pretty long formula to calculate this, but it's also based on an average rate of the rates that you have in ConnectWise for your employees to come up with that target hour rate. I think in the report information page, I think I had this added in here. Yeah. So down here, here's an example of the calculation of how we come up with. So like in here, you can see that average labor rate of 60. So it would be figured on whatever the average labor rate is that you have. So certain clients sometimes have to be tweaked, especially if it's a larger client where you might have 2 or 3 resources on site, and it might be that their rate is a little different from that average. During onboarding, we do kind of work with you to figure out what that rate looks like for your company. And this calculation is pretty much how, it's like for this particular one, 47 hours is calculated based on this rate. But the cool thing is it gives you that target hour to look for, to go for, to get that margin that you're looking for. So if your margin is off a little bit for a couple of months, that's when we would go in and look at it and say, hey, do we need to adjust this target rate for you?
Mm-hmm. Got it. We're running out of time. Does anybody else have anything they'd like to ask us? Christy, I'm going to go ahead and kick you off the screen share. Well, thank you everybody for attending. We really appreciate your time. We will be doing a drawing for those who are still on the webinar right now. Also, we'll be sending out the recording, so you should see that in your email with a link to that. And then if you want to reach out to Christy, you can reach out at the contact information above, or Kathy at Sierra Pacific Group with the contact information below. Thanks for your time, and we'll talk to you later.
Bye. Thanks so
much, everyone.
Thank you.